Welcome to TalkTickers. Today we're digging into the latest from Unusual Machines. They just put out their earnings call results.
Yeah, and it's another record quarter for revenue. That's 4 in a row now.
4 straight record quarters.
Yeah.
Impressive. What was the top line number?
First quarter revenue hit $2 million. That's a big jump, 59% year over year if you look at it on a pro forma basis.
Okay, 59% pro forma. And for you listening, pro forma just means it's adjusted, gives a sort of cleaner comparison year over year. But what about profitability?
Well, that's where it's a bit different. Gross margin was 24% for the quarter.
24%. So a decrease there.
Yeah, a bit of a dip. They pointed mainly to tariff charges hitting them.
Right. Those tariffs are definitely making an impact across the board.
Okay, so strong revenue, pressured margins. How did the different parts of the business do, like enterprise sales?
Well, interestingly, enterprise held pretty steady. It was about 13% of their revenue.
Huh. I thought maybe that would slow down with, all the talk about government spending uncertainty. Yeah, that was the expectation, but it held up surprisingly well. And they also managed their cash nicely through the quarter.
Oh, yeah. How did the cash position look?
They started Q1 with $3.7 million in the bank and actually ended it with $5 million. So improving there.
Okay, good cash management. But then the really big news came after the quarter ended, didn't it?
Exactly. Post-quarter, Unusual Machines closed a pretty substantial financing round.
Substantial is right. What are we talking about?
It brought their current cash position to over $40 million.
Wow, $40 million. It's quite a war chest. And management saying the focus is still cash flow and growth.
Yep, that was the message. Continued focus on cash flow operations, but also driving growth.
So let's talk about that $40 million. That's a lot of capital, especially since they ended the quarter with $5 million already. What's the story there? Were they needing it?
Well, according to management, no. They were pretty clear this was done from a position of desire, not need. So opportunistic, strategic, maybe.
Okay, desire, not need. How was the deal structured?
It was an all-common stock deal, priced at $5 per share.
$5 a share. How did that compare to the market price at the time?
It was a discount, about 23% below the volume-weighted average price from the week before.
A 23% discount. But who bought in? Was it new investors?
Actually, a lot of key insiders stepped up. The CEO, board members, advisors, even current investors increased their positions.
Oh, that's interesting. Insiders putting more skin in the game. Usually seen as a good sign, right?
Generally, yes. It suggests confidence from the people who know the company best.
Absolutely. So let's get down to brass tacks. $40 million. Where's it all going?
They broke it down into roughly 3 buckets. First, about $2-3 million is going straight into CapEx for their Orlando motor factory, getting that built out.
Okay, immediate investment in production. What else?
Second, they expect maybe $4-6 million in total operational expenses for the whole year. That's to get them towards being cash flow positive.
So covering the path to profitability.
Yeah.
And the rest. That leaves a big chunk.
It does. Around $30 million, they said, is basically being held in the bank. They're calling it a strategic asset.
A strategic asset. Okay, holding $30 million in cash.
Yeah.
What's the strategic thinking behind just parking it?
It's actually pretty interesting. The main reason seems to be credibility, especially with the really big government prime contractors.
Like Lockheed Martin, Northrop Grumman, those types?
Exactly. When those giants are looking for suppliers for long-term programs, they need to be absolutely sure you'll be around, that you can scale up if needed. Having $30 million in the bank sends a powerful message about stability and capability.
That makes sense. It de-risks them as a supplier for these huge multi-year contracts.
Precisely. It assures customers they can handle big orders. And there's another angle too, suppliers.
How does it help with suppliers?
Well, it boosts their creditworthiness. They can potentially get better terms, maybe priority allocation, and commit to larger purchase orders. That's really important right now, with all the supply chain disruptions.
Yeah, especially things like China restricting rare earth magnet exports recently. That's critical for motors, isn't it? Having cash could give them leverage to secure supply elsewhere.
Exactly. That financial cushion supports their whole plan around motor production.
Which brings us to the Orlando factory. They're really pushing forward with that.
Oh, yeah. Aggressively. They said the equipment's already ordered.
Already ordered. And the facility itself?
They're in final talks for a 17,000 square foot place in Orlando, dedicated just to making motors.
Okay, so taking control of that critical component, when do they expect to actually be producing motors there?
The target is August or September 2025. So still ways out, but the plan is in motion.
August or September 2025. And the idea is this improves margins and boosts capacity.
That's the goal. Better margins because they're making it themselves. less impact from tariffs, and just the ability to produce a lot more motors.
And in the meantime, how are they meeting current demand?
They're still using contract manufacturers for now. Got to keep fulfilling the orders they have while they build out the new facility.
Makes sense. Bridge the gap. Okay, let's pivot to the government side of things. You mentioned enterprise held up, but I heard government orders were slow.
They were, yeah. Q1 and even the start of Q2 saw slower government order flow than they hoped.
Any reasons given?
A few things. The continuing resolution in D.C., which always gums things up, some issues related to the DIU, the Defense Innovation Unit, and just general delays in getting new contracts started.
Sort of the usual government procurement hurdles then.
Pretty much. But on the upside, they did mention they've finalized sourcing for a fully NDAA-compliant FPV drone kit.
Okay, NDAA compliant. And for you listening, that's the National Defense Authorization Act stuff, basically meaning it meets security requirements, often avoiding certain components, particularly from China. That's important for DoD work.
Very important. And there are maybe some green shoots appearing on the government order front.
Oh, really? What did they say?
Just some early signs that smaller government orders might be starting to trickle in a bit sooner than they first thought.
Okay, trickling in. So potentially an uptick later in Q2 or into Q3 for enterprise sales.
That's the hope. But they were cautious. No official guidance for Q2.
Why not? Too much uncertainty.
Yeah, basically. Uncertainty around tariffs, the exact timing of government spending pickup, plus they're ramping up these new initiatives like the factory. Just a lot of moving parts right now.
So Q2 sounds like it's going to be a real transition quarter for them.
That's definitely the feeling. You've got the tariff uncertainty for consumers. They're probably buying extra inventory because of supply chains, spending CapEx on the factory. There are fees from the financing deal. And then maybe government orders start to flow again. It's a lot.
It is a lot. Looking beyond Q2 then, what's the bigger picture goal? What kind of revenue do they need to hit to be sustainably profitable, cash flow positive?
The number they threw out is $15–20 million in revenue. That's the range they think gets them to cash flow positive on a run rate basis.
15 to 20 million. And how far away do they think that is?
Their estimate is about 4–6 quarters. So maybe sometime in late 2025 or early 2026.
Okay. But they did add a caveat, right?
Yeah, they said it could be sooner if that government market really accelerates faster than they're currently modeling.
And they seem pretty bullish on the overall U.S. drone market itself.
They do. They talked about the market maturing and pointed specifically to the American Securities Drone Act.
Ah, yes. That's the legislation set to kick in when? December 2025.
That's the one. They see that as a potentially big tailwind for domestic manufacturers like them.
Okay. Let's shift to the Q&A part of the call. Often get some good nuggets there. What stood out?
Quite a bit, actually. They gave more detail on the Orlando factory timeline. It's not just flicking a switch. You've got equipment arriving, set up, finalizing the actual lease, getting the electrical sorted, supplier negotiations, parts coming in, setting up QC.
Quality control, yeah. And workflow. It's a whole process.
Exactly. They also doubled down on the idea that long-term margin expansion really hinges on making their own motors.
Yeah.
Getting away from those tariffs is key.
Makes sense. Did they talk more about who these enterprise customers are?
Wow.
Still focused on defense?
Mostly, yeah. Companies doing Group 1 and Group 2 work for the DoD. Those are classifications for smaller drones. They didn't name names, but said their stuff is being looked at or used by various companies in that space.
And is it just motors they plan to make in-house? Or could they do other things down the road?
Motors are definitely the focus for now, job one, but they said they would look at other subsystems later.
Based on?
Cost benefit, potential volume. But yeah, the message was, let's execute on this motor factory first, nail that down before taking on something else.
Focus is good. Did they mention the shares from the financing? Those floating around now?
Yep. The 8 million new shares are issued, sold, and out in the market.
Okay. And for people trying to model government revenue, that lag between budgets passing and actual money flowing, did they quantify that?
They did, roughly. It said typically there's like a 6 to 8 week delay from budget passage to actual purchase orders landing.
Okay, 6 8 weeks for the PO, and then for them.
Then another delay, maybe a full quarter, between them getting the PO and actually fulfilling the order and booking the revenue.
Right, so there's a significant lag baked into that government process. Good to keep in mind. What about the factory capacity itself? How many motors are they aiming for initially?
Initial target is a pretty wide range, actually. Hundreds of thousands up to potentially millions of motors per year.
Millions. Wow.
Yeah, but they stressed it's scalable. They'll build based on demand. And it ties into their bigger supply chain strategy.
Which is moving away from China, right?
Right. It's a tiered approach. Tier 1 is final assembly here in the U.S. Tier 2 is getting subsystems like the motor made outside China. Tier 3 is the components within those subsystems. Tier 4, the raw materials. That's much harder, longer term.
So a very deliberate, step-by-step plan to build a more resilient, domestic-focused supply chain.
Exactly. And they also mentioned the T-Motor sanctions. T-Motor is a big Chinese competitor.
Right. Has that helped Unusual Machines yet?
Not in a huge immediate wave of orders, apparently, because government spending was slow anyway, but it created an opportunity.
How so?
It gives them breathing room, time to get their motors sampled by potential customers, build relationships, and critically, get that Orlando factory ready for when the demand does pick up, which they expect it will.
So it's like the slowdown and the sanctions created this window for them to prepare for the next phase.
Seems to be how they see it, yeah. Positioning themselves.
Okay, this gives us a really clear picture. A company making big strategic bets, investing heavily, navigating some near-term headwinds, but positioning for potentially significant long-term growth in this domestic drone market. If you had to boil it down for listeners tracking Unusual Machines, what are the absolute key takeaways here?
I'd say, first, the cash raise is huge. $40 million gives them a really strong foundation for aggressive growth. It's a serious buffer.
Right, takes financial risk off the table for a while.
Exactly. Second, holding that $30 million strategically. That directly tackles concerns government primes and suppliers might have about their longevity and ability to deliver. It builds trust.
Smart move. What else?
Third, bringing motor manufacturing in-house. If they execute, that could be transformative for margins and supply chain security. Reduces reliance on tricky international suppliers and tariffs.
Big potential upside there.
Fourth, the government market. Yeah, it's slow now, but the potential is massive, especially with regulations like the American Securities Drone Act potentially favoring them down the line. It's still a major growth driver, even if delayed.
Okay, and finally,
just their stated focus and getting to cash flow positive. Reaching that $15–20 million revenue mark is the key milestone for long-term sustainability. They're clearly focused on that path.
excellent summary. Okay, now for the part where we put on our speculative hats, our "this is not financial advice" segment. Based on all this, got any outrageous but plausible trade ideas rattling around?
Okay. Outrageous but plausible. Well, given Unusual Machines is pushing hard on government contracts, building that domestic supply chain, maybe you look beyond them.
How so?
Think about companies that integrate drone components or provide specialized software or sensors for defense drone platforms. If Unusual Machines succeeds and becomes a preferred, reliable domestic supplier, especially for motors...
Then the companies using their components in bigger systems could benefit too.
Potentially, yeah. The idea is, as Unusual Machines gains traction and de-risks the component supply, these integrators might see increased demand or smoother program execution. So maybe a speculative long look at certain drone software or sensor specialists banking on Unusual Machines' success, indirectly lifting their boats.
That's a really interesting angle, playing the ecosystem around them. Of course, we absolutely have to stress, this is just a thought experiment, purely hypothetical, not financial advice in any way, shape, or form.
Absolutely not. Do your own research, make your own decisions.
Always. So to wrap it up, Unusual Machines showing strong growth, making big strategic moves with financing and domestic production, navigating some market chop, but setting themselves up for what could be a very interesting period ahead in the U.S. drone space.
That sums it up pretty well. A company in transition, but with a clear, ambitious plan.
We hope this deep dive gave you some valuable insights into Unusual Machines' latest earnings. What are your takeaways? Did anything else jump out at you from their report? Definitely continue your own research. Thanks for tuning in to TalkTickers.